Monday, the 2nd of May, 2021, and I'm just having a look at the news, the high impact news that's scheduled for this coming week, and really a couple of things just sort of catch my eye. I'll obviously be seeing how Monday reacts to the Fed, US Fed, Powell speaking, and potentially any around rate statements, always obviously relatively volatile, and really actually then I think it's going to focus on towards the back end of the week. We'll be focusing towards this Friday coming, the non-farm employment change. This is usually where we get the largest volatility spikes in the markets across the board. This can even obviously impact the cross rates or the cross pairs. And so that's what I'm looking for. We've had better than expected results recently, and we'll see if that's possibly going to be the case, but less likely to, I think, underestimate the outcome here. So that's really where I'll just be cautious around trading around those high impact news events. Okay, so moving along and having a look at the charts, starting off with the US dollar index here. The issue is, so first of all, there was an uptrend, obviously heading up towards the upside. The market then just immediately just kind of moved down for about 2-3 weeks in a row, broke the previous lows, thereby ending the prior uptrend, and now has actually also had a very aggressive day to the upside. So we have, technically speaking, a downtrend of lower highs, low lows on the daily. We have an uptrend on the weekly of high lows and high highs, and we have a downtrend on the monthly, but we are definitely within a range. Okay, on the majors, most of the majors, if not all of the majors, are still within ranges, and therefore what we're effectively seeing now, if you're wondering if it's you going crazy, if the market's doing something and then changes its mind, it's not you. The markets are very much range bound, and this is largely driven by the US dollar. Okay, there is a struggle going on. It is range bound. It's trying to determine if it's going to stay within the range and go all the way to the top. At the same time, it also is within a trend and is trying to determine if it's going to keep doing the trend and head down to the bottom. So there is a battle point, which is what these arrows were highlighting, that this is an inflection point where the dollar is going to try and decide what it's done. What it has done technically is produced a swing high here within a lower high within a downtrend, but at the same time, it's looking nice and bullish on the weekly. So really what that means is that you're not going crazy. The market definitely is struggling, doesn't really know what it wants to do. It is the US dollar that's driving it. So if I go across and have a look at the euro US dollar, what I'm really looking to see is how the market reacts at this 1.2 level tomorrow, this coming Monday, and just to see how it reacts to that. Does it find support? And it might dip below it, but it's a relatively decent level, and actually somewhere around 1.1985 into this area to see if it finds support and then tries to bounce back from that. That monthly, again, although it is inversely correlated to the dollar index, it still looks more bullish than bearish, and I want to see how that plays out. But in terms of clear money making, high probability, relatively speaking, safer trading opportunities, there's very, very little, if any, that are available. For trades, it's going to be on the much lower time frames, 15 minute, 30 minutes, 1 hour. Get in, get out, take profits. Kind of definitely more. What's the word? Offensive, I guess. Offensive trading in terms of just making sure protecting our stop losses and being more cautious as well. So sterling here is definitely within a range, no clear direction at this point in time. It's struggling to find buyers above that 1.4 level. What I'd actually like to see happen here, which would be great, is to see it actually weaken, come back down to the 1.35 level down here to test this for support, which would be part of its uptrend on the monthly, have a nice little correction and a retracement down to most likely a fib level, find some support, nice little bullish candle, and then resume that trend to the upside. So that means it would have to head down to the bottom of the range, ideally a break out below that range and head down to 1.35. That's what I'd like to see for sterling. Then have a look at the Australian dollar versus the US dollar. Again, same thing, it's really struggling with buyers above that 77.50 level. And it's also largely, encountering resistance here and also largely range bound. So basically high risk. If there's just simply, algos that are trading ranges or trading kind of reversion to the mean are going to be doing fine. Discretionary traders are just going to get burnt if they try to participate in the market when they look like this. Anyway, so here we've got a bit of a bearish rejection candle on Kiwi dollar. It's also in an area where it's struggling to break through. But at the same time, that monthly price action has pulled down, has come down and produced a bullish candle here. So really that possibility here for, we've still got to wait for the new monthly candle to start up. But yeah, this could produce a swing low, and so we could really be seeing over the next few months, ultimately seeing a weakening of the US dollar. So the big picture, potentially weakening of the US dollar, but right now just giving so many conflicting signals. We've got dollar yen, which does its own thing anyway, which actually I was really expecting this to come back up, at least head up towards 111.70, which is around about where there's some historic kind of resistance, and it didn't really do that. It sort of had quite a big drop, and now it's looking like it's pushing back up. So if you've been trading dollar yen over the last kind of 2 weeks, you would have been flung all over the place, because it on top of the dollar not really knowing what it wants to do, dollar yen often will try to buck the trend and do its own thing anyway. Dollar Swissy is really going to be very similar to that dollar index, and inversely correlated to euro dollar at this time, and so really that is giving the same conflicting signals. We've come up here, bumped into 9400 as a level of resistance, broken the previous high, so this downtrend is finished. So now that we're sort of waiting to see what the market's going to do. It's produced a very strong bearish rejection candle at this point, or just a bearish candle here, and actually a break off the low of that implies that it's going to also head low, which would also be a weakening of that. Then finishing off with the only one that to me is viable and actually looks very good, looks very decent, is dollar CAD. Dollar CAD has been one of the star performers that has managed to break out below this level of historical support at 1.25, is coming down into an area where it's certainly possible it can have a bit of a bounce, but overall it's got a nice downtrend on the monthly. It's got a beautiful, really beautiful downtrend on the weekly, and a downtrend on the daily. So pullbacks into 1.24 to 1.25 for me will be looking for selling opportunities over the coming week, and that is really the only one I've seen, and it's very appealing compared to the rest, and it also supports the idea of a weakening US dollar. So just to recap, I'll be definitely staying away from most of these charts. I'll be keeping an eye on dollar CAD. It's the only one I like, and the rest, my expectation is that there could be, I'm just really waiting for the markets to pick a direction. I'm seeing them as being high probability and actually really worthwhile staying away from myself anyway.